Let's just jump right in. Today, we are tackling something that looks, honestly, super intimidating from the outside. But once you break it down, it's beautifully simple. Even if you're somewhat familiar with the markets, looking at raw charts can still feel overwhelming. So today, we are stripping things all the way down to the pure basics. Our entire focus is on one absolutely crucial thing: how to actually read raw price data right on the chart using candlesticks. No fluff, no confusing jargon, just a step-by-step foundation so you can walk away with absolute clarity.
You know, if you're anything like most people when they first open up a live trading platform, you probably relate to this quote perfectly. You picture this chaotic maze of cable lines, bizarre indicators flashing everywhere, the stressful land of bankers, and traders literally downing ulcer medication, right? It looks terrifying. The financial world kind of loves making things seem much more complex than they actually are. But actually, scratch that, we are getting rid of that complexity today. A chart isn't some impossible matrix code you can't decode, it's really just a highly structured visual way to organize data.
To get us there, we're going to build up this knowledge block by block. Here's our agenda for this explainer. First, the chart mystery. Second, raw price data. Third, bullish and bearish trends. Fourth, reading the real body. Fifth, wicks and doji candles. And finally, we'll wrap up with the big picture.
Okay, let's dive into this. Section 1, the chart mystery, and how we strip away the noise.
So, the absolute biggest trap you can fall into is cluttering up your screen with a million strange indicators. You know the ones: moving averages, momentum bands, all those colorful lines zigzagging everywhere. But when you clear all that out, you are left with the most crucial foundation: naked price action. This is the pure, raw data showing exactly what the price is actually doing right now, without any overlays getting in the way. Remember, all those fancy indicators? They literally get their info from this exact raw data anyway, and they are usually lagging behind. So mastering naked price action first gives you a massive edge because you are looking right at the direct source.
Moving on to Section 2, raw price data, and how these act as containers of time.
So, the crucial point is that a chart isn't just showing you price, it's showing you price over time. Each of these individual vertical shapes you see, the candlesticks, is basically a visual container of time. It tells a completely closed story about a specific time frame. For example, if you're on a 5-minute chart, one single, fully formed candle equals exactly 5 minutes of price action. Every little tick up or down is packed right in there. If you flip to an hourly chart, one candle is 1 full hour. A daily chart, 1 complete day. It literally takes the wild chaos of real-time trading and boxes it up into neat, time-stamped visual containers.
Which brings us to Section 3, bullish and bearish market direction.
Now we get to the core binary language of the market. To interpret candlestick bodies, you absolutely must first identify whether the candle is bullish or bearish, which simply tells you if the price increased or decreased during that specific time period. On one side, we have the bullish candle. These are usually colored green, and they signify that the market is pushing higher, meaning the buyers won that time frame, and the overall price increased. On the flip side, we have the bearish candle. These are often red, showing the market is falling, which means the sellers took control and the price decreased. Green means it went up, red means it went down. Understanding this fundamental tug-of-war is everything.
Let's jump right into Section 4, reading the real body, where we look at open and close prices.
Now, what's really interesting about this concept is how we dissect the actual anatomy of these candles. That fat rectangular part, that's called the real body, and how you interpret it depends entirely on the type of candle. Notice how the opening and closing prices literally flip depending on the color. The real body shows the specific price action just between the open and the close. So in a green bullish body, because the price increased, it naturally had to start lower and end higher. The bottom represents the opening price and the top represents the closing price. But for a red bearish candle, it's completely reversed. Since the price decreased, it started high and ended lower. So the top of the body shows the open and the bottom shows the close. It's a brilliantly simple way to visualize exactly where a session began and ended.
Let's look at a super specific case study to really lock this in. Imagine we're looking at a 5-minute chart for the US dollar traded against the Japanese yen. We isolate one single green, bullish candle that formed right between 6 a.m. and 6:05 a.m. on April 16, 2015. Just by looking at that one little visual box, you instantly know exactly where the price opened at the stroke of 6 a.m. and exactly where it finally closed right at 6:05 a.m. It gives you a highly specific micro story for that exact 5-minute window.
You don't have to guess. The data is permanently stamped right there in the real body.
Let's move to section 5 and see how this builds, focusing on wicks and doji candles, the extremes of the market.
You see, price rarely just travels in a lazy, straight line from open to close, so you won't always see just those fat, rectangular bodies. Usually, you'll spot these thin, vertical lines stretching out from the top and bottom. We call these wicks, or sometimes shadows or tails, and these are incredibly valuable because they act like temporary footprints. They show you the absolute highest and lowest extremes the price touched during that period before it finally retreated and closed. Psychologically, they tell you exactly where the price tried to go and where it was heavily rejected.
So if the fat body is the distance between the open and the close, and the wicks are the extremes of the battle, what happens when you see a strange mutation on the chart? What does it mean when a candle has long wicks, but absolutely little to no real body at all?
Well, if you encounter a candle with little or no real body, it is known as a doji. This indicates that the price opened and closed at the exact same or very nearly the same price, completely regardless of how wildly it might have moved during that time period. And this brilliantly illustrates a massive market tug-of-war. The price might have swung way up and way down, creating these super long wicks. But by the time the clock ran out, it ended right back where it started. It represents total market indecision. Neither the bulls nor the bears managed to win that specific battle. A total draw.
Finally, section 6, the big picture. Let's put this story together.
Now that we've broken down all the anatomy, reading naked price action is really just a simple, repeatable checklist. When you look at a chart, first identify your time period so you know the container size you're working with. Then look at the real body color. Are we pushing higher in green or falling in red? Next, check the open and close positions on that body to see where the period started and finished. Note the wicks to see those extreme highs and lows and where price got rejected. And finally, spot any doji candles to identify where the market is stuck in indecision. Honestly, with a little repetition, checking these elements just becomes pure intuition.
By stripping away all those confusing, ulcer-inducing indicators we talked about at the very beginning, and just focusing on this raw, naked data, the whole game changes. You realize that the market isn't just some giant chaotic casino designed to overwhelm you. It's actually a highly organized, minute-by-minute visual story that is just waiting to be read. You now have the exact foundational tools to decode that raw data block by block. So, I'll leave you with this question to ponder the next time you open up your screens. What story is your chart telling today?